Good morning, everyone. Welcome back to the Schwab YouTube coaching channel for our Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner. I'm a senior manager and trading coach with the Charles Schwab team. And today, as always on a Wednesday, joined by my friend and fellow Schwab coach and senior manager, Brent Morris. Good morning, Brent. How's it going, buddy?
Hey, I'm doing good, Kevin. I'm looking forward to some winter to finally hit in Utah here. I know this is funny because probably most of the country has had like this really cold, terrible winter. We've had nothing. And so we're actually supposed to get some snow today. I haven't seen it yet, but I don't know.
Yeah, I get it. It's interesting. Those of us in the high desert, so to speak, out here,
Yeah.
Utah, Colorado, we get a lot of that sunshine, and we're supposed to be getting weather, some snow and whatnot, and it's just been really dry. So remains to be seen whether we'll be braced for actual snow or not. But nonetheless, you are all here not to talk about the weather, of course. You want to hear about the market, so we're going to do just that. Today, we're joined by Barb Armstrong in the chat. Say hey to Barb. She'll manage comments and questions Brent and I are unable to get to, but needless to say, I hope we want to hear from you. We'll keep an eye on things. Please feel free posting in there for the duration of our show. We'll go about 45 minutes or so. Remember to follow the three of us on X, Barb Armstrong CS, Brent Morris CS, and Kevin Horner CS. The best way to meet up with your coaches when we're not hosting classes for you, so we would appreciate a follow there. Beyond that, just make sure you're subscribed to the channel, obviously, here at Trader Talks specifically, so that you're up to speed on everything that we do for you. Remember, we're here live daily, starting at market open, carrying to about 4:45 p.m. Monday through Friday. So you've got a lot of live content, most of which is available in the archive as well. Let's jump to our disclosures, and then we'll get down to business with all of you. Please remember that our conversation here is informational and educational only. Simply put, we do not make recommendations nor endorsements for any specific approach to trading. We will, however, bring concepts and strategies of technical analysis to the table as we discuss these moves in the market. Remember, technical analysis is just one piece of your decision-making puzzle. We discourage you from basing decisions exclusively off technical analysis. In our show here, we do take a top-down method to our review of the market. What does that mean? Well, it means we start broadly. We'll hit up the major indices, the S&P 500, the Russell 2000, the NASDAQ 100. We'll also expand looking into the semiconductors and want to get a quick snapshot of some of the sector moves that are notable of late. We've talked a lot about this in this class for the last 6+ weeks on a year-to-date basis. It's been a very different market. We'll continue that conversation, but we may be at some interesting areas from a technical analysis standpoint in a couple of those lagger groups. So we'll be sure to hit those for you today. And with that, Brent, let's jump to the S&P 500. I'll tell you what, we continue to hold this year-to-date range, basically a 200-point range, ballparked at about 67.75 up to 7,000 or so. Brent, I'm not sure. Is there something else that you're watching here, or does this feel like we are all looking at the same thing, that specific range that we've seen over the last 6-8 weeks?
I think sometimes with technical analysis, it's easy for different people to see different things. I think it's hard to see anything but this channel that we're in right now, to be honest right now. We're going to look at a lot of resistance and support levels today, because there's a lot of meaningful levels we're bouncing off of on different individual stocks or industry groups or sectors, and that's what we're seeing here. I mean, that's a key support level. That line you have in green, and it's kind of trendless. Sometimes when we look at trends, we'll look at moving averages, or the moving average is going up or down. Is the stock bouncing off the moving average? When we're going sideways, those moving averages are just kind of going sideways, going nowhere. They tend to be less impactful in terms of resistance and support, but the channel is the narrative right now, I think. And we're once again, yesterday, we had a chance. We kind of tested it with the lows of yesterday, but by the end of the day, we had bounced up, and this morning, so far so good, I guess.
And that's just it, Brent. I mean, we're not exactly we haven't seen a breakdown here, right? So it's not a bearish chart, a bit more neutral. And those are the instances where people get a little frustrated, I feel. We are always looking to see, can we get this period here where we're above the 50-day and above the 20-day and we're just running nicely to the upside? Those are fun periods. It's these instances where we don't go anywhere and price is kind of languishing and we're struggling a little, where people get a little uncomfortable, a little less, it's less enjoyable. That much is true. But interestingly enough, I was looking at this on the hourly bars yesterday, and you can clearly see the range here as well. These are the same lines, of course, but when you zoom in, boy, we got down there. In fact, I tweeted about this yesterday when we got there, and I said, hey, this is the level. We need to hold this if we're going to have any opportunity. And sure enough, we bounced. It's still unclear whether we've got any chance to just get pushed back into the 7,000 though ledge here, isn't it?
Yeah, I mean it was like a perfect bounce intraday there, and we still got a ways to go to get up to the 7,000 level. But hey, you know what? It's not, in the grand scheme of things, it's not terrible. I mean, the markets can't go up at the rate they were going up forever, and so I think for a lot of traders, I'd say even for me, it's kind of like I'd probably rather have have this extended sideways consolidation rather than just a violent retracement in the markets, and we haven't really seen that violent retracement. We've seen more of this consolidation. So, think. I know for you bulls out there, this may not be the ideal scenario, but it's actually maybe, given that perspective, it's not terrible either to have this kind of channeling pattern, sideways channel.
Yeah, it's really not. The truth is, obviously, the thing that changes is when we get a close under that 67.75.
Yeah,
that brings us a greater risk, right? The more likelihood thereafter is we visit maybe the horizontal support or the 200-day moving average. That level looks to be pretty well established here, I would say, Brent. If we go back into the fall of last year, for example, you could see we've tested that ledge a couple of times, and now that we've got the upsloping 200-day moving average coming into that zone, it would kind of strengthen or give us additional confluence at that ledge, that if we get there, that's going to be an interesting spot for bulls who are maybe sitting on their hands in cash right now.
Yeah, and when we look at support levels or resistance levels, you kind of have to deem how strong or significant they are, and the more bounces off a level, probably stronger. If you have convergence of like a horizontal and a diagonal, or a horizontal and a moving average support or resistance, I guess, for that level, for that matter, it's those all lend more strength to the idea that it's going to bounce there. Of course, there's no guarantees. You can have the strongest support or resistance and they can break through them, but you have to judge any support level by that, because otherwise you could find support levels anywhere or resistance levels anywhere, unless it's like at an all-time high and there's nothing there. But even then, you could use like probably a Fibonacci extension to look for something. But so you got to make the judgment. We're going to see quite a few of these today where we're bouncing off them, but when you see a line like that white support level, hey, it's right around the 6,500 level or so. It's right at the significant moving average, a 200-day moving average. We've bounced off it a few times, probably pretty significant.
Yeah, and you know how I feel. I'm always going to be interested in drawing a Fibonacci line. So let's just see, just for fun, we go to that extended low from the Liberation Day lows, and 23% retracement would fall right beneath it, 64.78. And again, that's just an estimation. We're not going to go to the penny on such moves, but all of this kind of coincident with that same level kind of does give you some validation for potential support. And again, one of the reminders that I want to bring you, Brent, I say this all the time, we have to be thoughtful about the levels to which we can fall. But commonly, we traders think, oh, we're going to be perfect in our analysis. And you may not think that consciously, but subconsciously, we're thinking, oh, well, we should follow the 200-day moving average. That's where we should see a bounce. But very commonly, Brent, we get down there and we trade through that level with some volatility, right? Because traders tend, especially newer traders, they tend to leave their exit strategies right on those levels, right on those moving averages. They don't give them any wiggle room. And what happens is you see orders going off, prices going lower, more selling. That volatility gets us very uncomfortable live and in the moment. So my reminder is to find the level that you think is the most important area for support, and then find another one below it. Give it greater idea that there could be weakness that you don't expect, and it could get you very uncomfortable. Brent, what are your thoughts about maybe just emotionally preparing for something that you don't expect to happen?
Well, you have to, because unless you're a lot more astute than me, you're going to have stuff that you don't expect to happen. Because look, I mean, first of all, when we talk about support levels or resistance levels, they're areas, they're not exact prices, number one. But even talking about the area, you're right. Sometimes it's not going to happen in that way, and you're going to be wrong, and you need to have your backup plan. And it's like anything in life, if you're taking it seriously, you should have like a contingency plan of some sort, and realize, hey, it may go against you, and what are you going to do? And think about it ahead of time, because your head's going to be muddled if it's in the moment and you're worried and you have real money on the line. So have your plans ahead of time, and the plans may not be like, I'm going to exit here, or it could be like position sizing adjustments, stop adjustments. It could be different things. And so anyway, I guess that would be my 2 cents there on that, Kevin.
I appreciate that. You're right. I'm a big believer in the idea that we can do so much with technical analysis, but the key to the technical analysis is the additional aspect, the other vein, that being trade management, how we choose to expose our dollars or we pull our money from the market. A lot of the time, those decisions are the ones that give us comfort to stick with what we've got on the table still. So having those plans, sticking to those plans, it's really key to staying in the trading and investing game, of course. Brent, let's move on to the NDX. We know the story here. Heavy on weakness as it relates to one of the bigger groups, that being software. And what we've noted here, Brent, is we've just pulled back. I've got a lot of stuff drawn in here, but that's another Fibonacci move. And the validation on the NASDAQ here is right to the same 200-day moving average. Does this kind of give you the idea that maybe we could very easily visit this? I mean, there's nothing to say we can't, of course, but this also looks like we're under some consolidation after a really strong move. I'll just remind you, when we look at the NASDAQ off of the April lows, it rallied 58%. It makes sense that we need a pause after a while, no?
Yeah. Most of what we said about the S&P 500 could probably be said about the NASDAQ, because, hey, a lot of the major components of the NASDAQ, technology being the biggest one, which is like almost 60% of the NASDAQ right now, I think, is, and that's, technology is about a third of the S&P 500. So it's not surprising we see this similarity between the charts. We also have that convergence, like we just said, about the horizontal and the moving average. Those are kind of levels. So wouldn't surprise me, because this is the driver of, to a large extent, of the S&P 500 right now, so that the chart pattern would look relatively similar, not surprising.
Yeah, I tend to agree. Again, we know the reasoning here. We know that tech has been weak, but it's holding up. And again, when I say holding up, we're just basically allowing that really long moving average, that 200-day moving average, to provide, rather to get caught up with the trend move. And if we get down and tested it, it's not a negative to test support. Commonly, that gives confidence to the trader who wants to participate, Brent.
Yeah, and for longer term traders, that's why they paid more attention to longer term moving averages. If you're a longer term, say an investor or something, you probably don't want to get too caught up in what the 20-day moving average is doing, because you're going to be in and out, and more often than it is probably appropriate for a long-term investor. And so that's where this 200-day, which is a pretty common moving average, where it starts to bring in more than just the individual trader. The shorter term trader can still use it, but it also starts to bring in some action from longer term investors too, with that 200
Yes.
average.
Yeah, great reminder, because those moving averages are commonly tracked by the trader or investor who is interested in being in the position in that window of time. So if we're looking at it from a 20-day trader standpoint, or 20-day moving average, that's probably a speedy trader, right? Someone who's trying to be in and out, swing trading and whatnot. But the 200-day moving average is commonly visited in trending scenarios once, twice, maybe 3 times a year. Not very common, right? So it does bring in a different time frame for the trader who is maybe longer in nature, maybe a year to year instead of day to day, week to week trader, Brent.
Yeah, question in the chat. Some traders prefer the 150. Yeah, those kind of round numbers are the ones that traders typically use. The 100, the 150, the 200, the 50. Those are kind of the biggies there, I would say, for, as just kind of going out in time. You certainly can use others, but those are the ones that probably more traders are more likely to use. And therefore, from a technical analysis standpoint, probably the more meaningful ones, in the sense that if more people are using them, then more people may consider that level to be a support level or a resistance level or whatever we're looking at, and therefore more people may take action based on that. So in that sense, it can be a little bit of a self-fulfilling prophecy, so to speak. Now, of course, there's no guarantees, and because a lot of this is dictated, we're talking about technical analysis. This is a technical analysis heavy class, but by market fundamentals. And that can certainly affect these things more than just the technical analysis.
Yeah, you said it. Self-fulfillment is such a key component here. And I think that for a lot of traders, they get concerned by the idea of self-fulfillment, when I think many longer-term traders who've been doing it for a while, they lean into the idea of self-fulfillment because it validates the levels of support and resistance commonly. What is self-fulfillment other than traders seeing the same thing and applying their strategies based on those viewpoints? And I think that can give you a little bit more confidence, perhaps, to trade those same levels. It's why we consistently look at those standardized moving averages, 20, 50, 100-day, 200-day where appropriate, but not everybody does. And sometimes a trader is going to look at just the trend that makes the most sense. What moving average is being respected by the instrument we're looking at? For example, we're looking at the Russell now, kicked it over to small caps. Brent, I think it's pretty darn clear here that the most important moving average in this case has been the 50-day. It's pretty clear, isn't it?
Yeah, you look back and see how many times over the past, what do we got, year chart here?
Yep.
We've bounced off that 50-day, and how much it's held since kind of April, May area where we broke above it. We've spent a couple weeks maybe below it, but other than that, right in there. Other than that, we've been above that, and when we've come down to it several times, including on kind of the beginning of the year, and then just a couple weeks ago, and then just a couple days ago maybe. It's held, and therefore we didn't know this ahead of time. We didn't know that 50 was going to be significant ahead of time necessarily, but at this point we'd say, hey, the 50's the key one, and at some point that'll change. Everything changes, but right now that's the one we're gonna focus on.
That is the truth. Everything changes. Let's not get married to something. I mean, we can take the approach until it works. I mean, like I've been saying quite a bit this year, Brent. The market was giving us a very distinct trend from 24, 25, or 23, 24, and 25, right? Very bullish in the S&P, heavy in tech, and things have changed. So we have to change with it. It's important that we do so. One of the other notable details here on the Russell is just the downtrend line off of that prior high. So let's keep an eye on this, because a break of the downtrend line commonly for many traders becomes an entrance, a very early entrance, admittedly, but for some traders, they want to get started on that first break of the downtrend line and an expectation of the continuation of the trend. So we are kind of approaching that here in the Russell. We'll see if we can get a breakout. But the structure here has been favorable in the sense that we've broken higher, pulled back to former resistance, potential support, and it happens to coincide with the 50 there. All of that gives you a proper bullish trend, as you can see, lower left to the upper right. So not much to be discouraged in the near term here about the Russell. Some of the consolidation, as we've been holding in here, the fact that we've not pushed higher is a little bit of a heads up to me, because we've noticed that yields have dropped quite dramatically here. We got up into that 4.3 area 2 weeks ago, and suddenly we came all the way back to under 4.25. Pretty significant move, or right back to about 4.25, I should say. Looks like we're in line for maybe a little bit of a bounce in the yield here, Brent, but I think that the opportunity for the Russell is still favorable when you overlay the look on yields and expectation for yield or rate cuts, between now and the end of the year.
Yeah, I would agree with that, Kevin. Also, I think one thing when we think about small caps is they really underperformed for a long period of time. So at this point, yes, they're outperforming, but kind of, I don't know. I mean, this may not be a great analogy, but for if you think about like silver, gold, silver was outperforming so much, and then recently it sold off more.
Yep.
Things have a way of coming to an equilibrium in a sense here, and so small caps underperformed large caps for really an extended period of time, and lately they've been outperforming. Maybe it's kind of due in a sense in that regard.
Yeah, entirely true. You could see that too, by the way, if we went ahead and looked back at maybe the Russell on a much longer term chart, and I can move some of these details around, but you can see on a 5-year basis, which is what this chart is now. Take a look. When we got through that level, Brent, we say this all the time, the importance of moving through resistance. You take off the cap, right? The lid comes off and you can start moving higher, right? Well, that's exactly what we've seen here in the Russell. And it's finally put itself into a bit of a leadership position, which is not all that bad for the market, but it's just a different market. And I think that's the reminder we want to give our viewers and attendees, is that the market is not the same. Now, interestingly, we've had a continued move here in the transports, which have been producing pretty well of late. And I got to say, Brent, when we have transports providing leadership the way they have, it's really hard to suggest that the economy is not that strong, and yet everything feels different than what we're seeing. And I say feels different. This is taking maybe what's happening in my grocery store when I go to visit, make all my purchases versus, what I'm getting from these patterns in these charts. But you've got transports essentially trading at all-time highs now. And Brent, it is all three legs of the stool. We've got rail stocks moving higher, bouncing off the 20-day in the sector, not even giving the 20-day a test here because they've exploded. And then if you take a look at something similar like the truckers, you've had another big move to the upside, and even the air travel has done well. So, I mean, all of these groups are providing us with a bit of a heads up. Transports in leadership like this, it's going to be really hard for the market to struggle or show breakdowns if transports are leading too.
Probably a good sign, probably a good indicator of economic health, I guess, Kevin. A lot of times I think we've had a lot of worry over the past, year or more about the health of the economy, but it seems to be holding up relatively well. I think we see that in the Russell that we were looking at earlier too. Small caps don't perform super well if people are very concerned about the market typically. Well, transports are a traditional way of kind of looking at this, and transports, including, as you mentioned, the three pillars of it, are doing well. Probably a good sign, and it doesn't necessarily mean that the market as a whole, that's why if we could get technology to do better, then we'd probably see it reflected in the rest of the market. But in terms of just pure economic health, this is probably a pretty good sign.
Brent, you said it. If we can get the other groups to provide a boost where they've been kind of consolidating, neutral, sideways, then we've got the opportunity, right? Because when we look at something like the visualize using the heat map here in the S&P 500, and you want to look at your industrials, for example, you look down here in the industrial space. Let's open this up. Hit industrials, and then go into industrials. I'll just give you a little bit of better visual here, everybody. What about something like ground transport? There's just not many companies, Brent. It is small, right? And so if you look at that, you look at air freight, logistics. These, again, are measuring what is being shipped across the country for us, right? These are very few companies. So the fact that they're leading is great, but that's why we're not seeing the S&P breakout, is because we aren't getting that leadership from our largest group, obviously, technology.
Yes. And if you look at the whole heat map, just look at the percentage of the graph that is taken up by IT or communications or financials versus some of these others, industrials, staples, energy. I mean, energy's been great. Energy's been the top performing sector over the past month.
Oh, yeah.
Materials has been the second best performing sector in the last month. Staples has been the third best. Well, they're all these little, like, puny may not be the right word because there's some bigger companies, but they're all the smaller in relation there. Whereas what has been the worst performer over the past month has been discretionary, communications, financial, and IT. Those are kind of bigger pieces of the pie, so to speak.
Yep. This is it. This is the conversation, if you ask me, Brent. The biggest chunks of the S&P, all negative 3 to 4% year to date.
Yep.
The biggest chunks. And yet the smaller chunks are up immense. Energy, 21%, materials, 16, staples, 13. So this is actually the favorable nature of the S&P. It's what allows the S&P to be such a good validation of the health of the economy, is because of this dispersion between the 11 sectors. But understanding the makeup, the component, the size of all of this is very, very important. Now, Brent, you mentioned energy. Let's talk about it. Let's see here. I'm going to pull up this and click on energy. Let's see how energy is moving. It's continuing aggressively pushing to the upside. Broke the downtrend line and have aggressively pushed higher. We did get a very brief, what some would call a sell signal from the RSI, Brent, when we were above the 70 line and have now traded back below it. So some traders who employ the RSI would consider the move from above to below 70 as a reason to lighten up their position size, perhaps. Not everyone, but some traders will do that. And then the second question is, do we rely on the 20-day, which is in this case about 35 points away from the current price in this particular sector, or do you want something tighter like the 10-day, which we just tested yesterday for support? So all of which kind of gives you the same story, though, just picking the right moving average for trade management here.
Yeah, absolutely. So and the shorter term, that moving average, 10-day moving average, is a very short term moving average.
Yes.
Look, we've been above that since pretty much all year. It's all calendar year, that is. It's that, that's really, really strong, and it's still holding there. So you're not going to find that in probably any other sectors at this point, but it is just something to keep in mind there. The shorter term, the moving average, the longer term, we can stay above it. That means a stronger trend. However, it also means that it's probably not realistic that it's going to stay above it for, another 3 months here or anything like this, but who knows, I guess.
Yeah. Well, I mean, we could say that we know. We don't. We don't have an indication. Well, we know, how traders might look at this. Certainly, a close under the 10-day for the first time since December would be a significant development for a lot of short-term traders and would be a reason to take a little bit off. Nothing more than that. I mean, that's just effective trade management. Wanted to touch on, since we're talking energy, let's talk about oil briefly. I'm going to put in the crude symbol here. This again is a futures symbol, not to suggest that we are discussing futures. And of course, remember, futures trading, this is a higher level of risk. You do need to be approved previous in order to do so. Make sure that you're going through your requisite steps and are familiar, of course, with the characteristics and risk of futures trading. You're going to read that disclosure statement. Brent, we're getting a good move here today. Oil's up 3%.
Yeah.
If I was to look at this from a technical standpoint, it looks like a support bounce off a very important level, the 200-day moving average at about $62 a barrel.
Yeah, exactly. And I read a news story that JD Vance said Iran ignored key U.S. demand, and so a lot of this is probably kind of geopolitically driven in terms of U.S. in discussion with Iran on oil, and then there's of course the Ukraine situation. It's that can drive it, but from a technical standpoint, hey, moved up, kind of this sideways kind of channel-y thing the last, I don't know how long, 2-3 weeks and that we're in, but that seems like we've kind of solidified. We've held that 200-day, we're now above the 20-day on that.
Yeah.
So we'll see.
Yeah, maybe we're getting oil back in a little bit of gear here, so to speak. Yes, the story, the narrative always plays, especially with oil. So you have to keep your ear to the rails on that. But the trends still matter as well. And this kind of comes out to be a little bit notable to me here, right around 62 as support. We had a request to look at the number of stocks in the S&P over the 200-day moving average. We can quickly do so here. We're going to do $SPX 200. I think it's SPX. What did I put in there? A200.
A200R. Yep.
A200R. There we go. And then that'll tell us, we can have this trend. So you could see the number here is the last trade number, basically 65% are above the 200-day moving average. And then this is just the trend of that. You can see, Brent, we were a lot higher, not all that long ago. If I change this to, for example, a 2-year chart and go back in time, we had a lot of stocks way above the 200-day back here in the 2024 window.
Yes, we did. So, I mean, that was a very more bullish time. And so this is a good indication of market breadth, because, a lot of times we talk about how much a small number of stocks move are really reflect more what the index is doing than the larger number. This is a great way of kind of seeing market breadth. By the way, everybody, if you want, so you got the symbol there for above the 200-day. You want to do the 50-day, just replace that 200 with the 50, and you'll have that. Or you can do 100 there. Just replace the number there, and you'll get the number above that 50-day moving average or 100-day moving average. So somebody said, "What's the chart? What's this chart?" Let me just back up here. Maybe didn't explain it very well. The number is just the percentage of stocks above whatever moving average we're looking at. In this case, it's a 50-day on the chart there. So what percentage of the S&P 500 is above the 50-day moving average? It's about the same as the 200-day. That's just coincidence. It doesn't normally line up that perfectly. But right now it's about 6.65, means about 65%.
Beautiful stuff, Brent. Always good to bring some additional context where we can. Taking a look at our sectors on the move, like we said, we hit energy a little bit. We should peek in another one here that's having a good bounce is discretionary today. Interesting because of its location, Brent. We got down into oversold conditions with our RSI down here, got under the 30 line. And then you got a candle yesterday that was kind of notable for some traders, didn't we?
Yeah, so that, if you look at that candle, that's a nice little hammer there on that.
Yeah.
And that's generally deemed to be more of uh, a reversal candle. And so, in other words, a reversal candle is one that you look at the kind of the prior trend of what things are doing and tells you it may be reversing. Sometimes there's bearish reversal candles, which occur at more resistance points, and there's bullish reversal candles, which are more at support levels. So we were looking down yesterday and we're going, well, look, about a week ago or so, we had a low. You see that big green candle about a week ago or a little bit more, perhaps. And are we going to bounce off of that level? Well, we kind of tested it, right, intraday, but we ended up right near the top of the day. And so that's, not a guarantee, but that's a strong candle indicating, hey, we're maybe getting a bounce here. And it doesn't always work out, but it followed up today with a nice bull up 1.3% today on discretionary.
Well, the reminder, as you said, is that it doesn't always work out. But traders who have seen these things play out in the past, they take their opportunities based on 1 and 2 day candle patterns pretty frequently. And a hammer is one of those patterns that really speaks to a lot of the traders, whether, bullish at support or bearish at resistance. In this case, pretty decent bull hammer indication at oversold conditions in RSI, lower low in price that got bought up. So that lengthy tail tells us that we trade. I mean, at one point, this candle looked like this candle, this huge red one, right? Yeah. But bulls were there. Bulls came in and flooded the market with buying at that level, and that's what created the move to the upside. That's why that tail has no real body to it, because we essentially finished at the top. And then today you're getting a hold move, with yesterday being the low day in the pullback to this point. Some traders would look at this candle finishes like this today. They're going to be optimistic heading into tomorrow. Major resistance resides at the gap ledge, and I'll color that red. That becomes an area for a potential rally to maybe take a breather, and then it becomes a wait and see. But a good area for a bounce nonetheless here in discretionary. Yeah. The big one that we need to see the bounce in, obviously, is tech. Let's take a quick look at that one, Brent, because you and I were talking pre-show how we finally visited the 200-day, and we did. We visited it, and yet, Brent, this is still not back in trend, so to speak. We're in, short-term downtrend, right, off of the highs. But have we given maybe the bulls a reason to give consideration to exposing new money to tech here now?
Yeah, I think so. I mean, we're bouncing off the 200-day, so we have a confluence of some shorter-term bearish trend and longer-term bullish indications, support, and something's got to give here. So you kind of have this descending triangle in a sense there on this that's forming, I guess. And so it's got to break out to one side or the other at some point. One of those lines it's going to break through. It's got to, because those lines are actually converging. So at some point they're going to come together. And so if we break above the upper line, that would be more of a bullish indication. Below the lower line, which we just bounced off of, which is a good sign, but it's not definitive that it's going to stay above it. But that would be more of a bearish sign on that. So that's, hope, but there's definitely, I think it gives people some more optimism bouncing off that. Certainly better than the alternative, I guess, but it certainly puts more uncertainty in my mind as to where this is going.
And I agree with you that the decision maybe changes, right? Under the 200-day moving average, that gets a little bit different, would be my thought there. Brent, there's also a good question in the queue about the Lunar New Year, the Chinese New Year, etc. When we're starting to pay attention to that, is there an impact on the U.S. market in that regard, other than maybe the time that is taken from areas of the market in celebration of this right now that are not currently open? That's the only thing that I could come up with.
That's the only thing I could think of as well, Kevin. So sorry, I don't have any comment on that. I don't know.
All right, that's perfectly fine. Wanted to make sure I asked. Thea had a question about Toll Brothers being in a consumer discretionary. Just simply put, I'll remind you, all the home builders fall into discretionary, if you can believe it. Discretionary being, of course, tied to the idea that, hey, when we are able, we have the money at our fingertips, the opportunity to buy homes, we'll do so. Unfortunately, the housing market is so well tied to interest rates and the overall cost to the bottom line that we're kind of in a locked interest rate or locked housing market right now, unfortunately. And that's definitely hindering things, but it is absolutely part of discretionary.
Yeah, I think so. Going back to Kevin, the discretionary versus staples discussion, because Wiley saying why is but a staple? I think part of it is just like, look, people will buy. You could say, well, beer is a totally discretionary type thing, but the way consumer behavior is people buy beer even if the economy's doing poorly, whereas people buy houses not so much if the economy's doing poorly. So I think that's really the parameter, that's the criterion that's being used there.
Well, we should say that is the thought process is valid, although apparently consumption is certainly down across the board in many areas. In fact, I noted this recently looking at some of the distillers and the spirits makers and beer makers. They've all been undergoing a pretty healthy drawdown as consumption in the alcohol space has kind of shrunk a little bit, possibly due to semi-glutides, right? Possibly due to expansion in the deregulation of marijuana, at least in the United States.
Could be. I mean, it could be more of a secular trend. And when we say secular trend, what we mean by that is longer term, just kind of general trends in the markets, not related to like a cyclical economic type trend on that. And, as I understand, I think younger people are drinking less than when you and I were, in college or whenever, Kevin. And that's now you gave a couple possible explanations as to why that is, but I as I understand it, that's the case on that. So it's alcohol use is gone down.
Well, I'll tell you, it'd be hard pressed for, based on the young Kevin, it'd be hard pressed for anyone to exceed the level of consumption that I had in college days. I'll just leave it at that. We should also talk briefly about financials, Brent, because they came down to a pretty interesting level here as well. Now, this is one where we broke that 200-day moving average, and a lot of you trend traders would be wondering, hey, did we get a break with some significance? But Brent, this one speaks to me to the idea that when you break a trend line that's been working, such as the 200-day moving average, we commonly find support at an area of horizontal support rather than another trend line. So I'm going to draw that in at the gap zone here, basically, and let you speak to what you're seeing on financials here.
Well, I'm seeing what you're drawing on the chart, and that is, we've seen this across how many charts have we looked at today where there's kind of these support levels where we bounced like perfectly off of almost. A lot of times they're not perfectly off of, but these are like really close. This is just yet another one here on financials where we were coming down a few days ago going, hey, this is a key level. Is it going to hold? Well, it so far looks like it's holding here. It doesn't necessarily mean a bounce off a support level doesn't necessarily mean bullish, but it does kind of change the bearish narrative there. Because for me to call something really bullish, I'm going to say, I want to see the trend. Well, this isn't really trending right now up or anything like that, but we have held the support level.
Yes, we have. And if nothing else, Brent, we can state that for a trader's view here, everything changes if we traded below that horizontal support. Again, technical analysis doesn't tell you what's going to happen, but it does help you understand how to set risk parameters. And under that 850 ledge in this particular sector index here would be a significant development from a bearish standpoint. So, of course, from the bullish standpoint, trend traders want to see us back up above that 200-day moving average. Brent, the one thing we didn't talk about yet today, and we only have a couple of minutes, so I'm going to spend a very brief moment on this, and that is the precious metals. Again, we're going to utilize those futures quotes, but things have really been volatile here of late, and we're trying to see if this is going to get back into gear, but ultimately I think what we're seeing is that the pullbacks in both gold and silver are volatile in nature, and commonly they need more than a day or two to resolve.
Well, we've talked about this, Kevin. When silver was going through the roof, when gold was going through the roof, I think the idea was when they go up that fast, they can drop pretty quickly too. And we've seen that especially in silver. Now, we've retraced. Obviously, you can see the big drop. Seems like maybe it's gaining its footing here a little bit more. I don't know what the future holds on this, but it does look like maybe it's stemming the tide of the fall here. And there you go, I guess.
Yeah, you can see gold is producing a little bit more favorably, right?
Yep.
The silver story, I think, led to that huge explosion move to the upside, the blow off top we got. And that was all tied to the AI conversation, right? Oh my gosh, we're going to need so much. This is something that we utilize for everything, as opposed to gold, which has been a little bit more of a safe haven viewpoint, if you will. That's been a common view, and that's why maybe it hasn't had the snap effect that you've seen with silver. Gosh darn it, we are at time, unfortunately. So we're going to have to wrap it there, everybody. I apologize we didn't get to everything on the list today, but I want to thank you all for being here. Brent, some really great insights today, man. I've enjoyed having you, as always, on a Wednesday. Thanks for being here.
Always look forward to Wednesdays, Kevin, and we'll be back next week for it.
Yes, we shall. And to all of you, thanks for being here. Big thanks to Barb in the chat. Barb, I hope you get that snow you're looking for, obviously. I know you'd like to be on the slopes. And to all of you, remember to follow us on X, Kevin Horner, CS, Brent Moores, CS, Barb Armstrong, CS. We really appreciate the thumbs up. So if you'd be kind enough, if you like the conversation, give us that thumbs up down below. We're going to get this reviewed into the archive for you a little later today. As always, have a fantastic rest of your morning, everybody. We look forward to catching up with you again real soon.